Hi everyone, it's time for us to look at the fourth quarter of 2025. I'm sure many of you have a wonderful time, ups and downs, and now mostly up in the year of 2025. We would like you to focus on three key points. First, we remain constructive on risk assets, and for relative outperformance, you need to have good stock pick, and especially in the AI and IT related sectors. The second point, China-US economic relationship is getting more realistic, and it would be good for risk assets returns. Third point, we continue diversification efforts away from US dollar denominated assets will be continued. We should pay attention to the commodities and alternative assets. Look back what we have said in quarter one. We see upside opportunities in equities and alternatives in Q1, and we see upsides in Hong Kong and China stocks as well. And we like technology and healthcare. And we see support to alternative assets such as gold, bitcoins, and AI themes and other policy-driven related fund flow, especially in Hong Kong, China sectors, will have an impact to the investors' return. And we are benefiting from this constructive tactic since quarter one. And now, we expect slow dragging US interest rate pattern in coming quarters, and US stock markets will be in consolidation or in a slow pace phase rather than rapid running up with very strong momentum. So we see this trend will be get into the 2026 Q1. Global financial markets performance has been good in the 2025. And we see especially the commodities that we have mentioned many times. Gold have up year to date 40%, and to a lot of people's surprise, silver also went up 49%. Bitcoin also 18-19%, and it will be picking up and is picking up recently. We see the Hong Kong stock market has been performing very well, is up 31%, compared with the 13 and 17% of S&P 500 and Nasdaq. So our assumptions that the fundamental really play a role, it really works. Again, for most personal investors, the barbell investment strategy I thought is working so far so good, and you have a return around 6, 7, 8%, and for the aggressive one, you will have double-digit return. Look at the currency size. The currency is dominated by weakening US dollar. And we see the US dollar index has been declining 11% year to date. And we see a strong appreciation against US dollar for the euro, and also quite a decent upside for the Japanese yen and the pound sterling, both up around 7% year to date. Interest rate is going lower a bit, should be in a slow pace. While you look at Japan, the interest rate has been going up. So we will see the interest rate trend is supporting a weakening US dollar trend, which is US policy want to imply, and actually it works. So far, so good. Now, when we look at to the Q4, we again have to put back the focus into fundamentals. Only fundamentals can be sustainable and can be driven through rough times. We will look at the economic fundamentals, we'll review the technology edge, and also we'll look at how effective are the government policies. These three factors should form the main argument for your investment actions. When we compare the investment attractiveness of a country, like China and US, from GDP growth, CPI, interest rate, unemployment, 10 piece of bread price means purchasing powers, and you look at the facts, the data that how the tech sector has been performing in Hang Seng Tech Index up 40% year to date, Nasdaq up 17% year to date. So the relative attractiveness is so obvious. And the other points that always make people worry is the peg. We do not see the peg will break in coming 3 quarters. And because it also benefit for the investor in the US and in Europe want to share the growth or the steady growth or the fundamental growth of Hong Kong, China. We see the turnover is another fact supporting that people put real money into the Hong Kong stock market. The turnover average daily in the Hong Kong Stock Exchange has been increased from 110 billion in first half of 2024 to 240 billion every day on average in first half of 2025. Action is much better than arguments and words. Personal assets allocation. In this quarter four, we will remain positive on the risk assets. 15%, 15% will be allocated to risk asset with yield and 10% to risk asset without yield. And we will retain 5% as cash for bottom fishing and 70% to high quality fixed income. To changes. Enjoy the good returns that you deserve in 2025 and wish you all the best in 2026. Thank you. Good luck and thank you.